Hi, this is Zak Mir with the weekend edition of the US Chartbreakers here at Zak's Traders Cafe. We start off with the S&P, where, of course, there's no relationship between how many times the market tries to get through a level and whether it'll actually succeed. So we still have to have an open mind. We've got the rising 50 and 200-day lines, 50-day line there around 40.60. While we're above that, we still have a chance of breaking 41.50 and then heading to 4300, hopefully as soon as the end of next month. RSI still above neutral 50, which is a bonus, but obviously, like the Dow, there's a chance of further tests of the 50-day line. Moving on to the stocks, and mostly new stocks today, which is perhaps a little bit disappointing, but there we are. ALTI Global is first, and here you can see a bounce off the floor of this broadening triangle from the end of January. Good bullish divergence there with the lower lows of the initial part of May, but higher RSI trace, and that's the reason for including the shares here today. The view is that the longer the shares remain above the $5 area, or 480 Friday's low to be precise, the greater the chance of a move towards the $9 area as soon as the end of next month, which is where the 50 and 200-day moving averages currently reside. On to another stock which looks like it'll have a bit of a continued bounce. Apyx Medical Corporation, rising trend channel here from October, top of the channel there towards $8, looking for that by the end of next month, especially while we hold above the 200-day line at $4. Ideally, we'll stay above the top of that November gap there at $4.50, ahead of a move to $8 plus by the end of June. Moving along to another bouncing situation. Airsculpt is the next situation, and here we've gapped through the 200-day moving average. Rising trend channel there from October, so very similar to the last setup that we've seen. That's heading for $8 in this case, and we're looking for $8 by the end of next month while we hold above the $5.90 area, which is where the 200-day moving average is at the moment. The other point to note is that we've had two recent gaps to the upside, unfilled gaps, so that gives us extra confidence of the move to $9, and plus the two gaps to the upside came after the gap to the downside, so it is an island reversal, and that is, or tends to be, a very strong charting situation. Onto a stock where the code is not the same as the name of the company, but ARS Pharmaceuticals has delivered what can be described colloquially as a handbrake turn in terms of the price action. We were falling like a stone until Friday, when we gapped up through the rising 50 and rising 50-day 200-day moving average and the 50-day line. 50-day line currently around $7, and above that looking for the July resistance line projection as high as $12 as soon as the end of next month, backed by the way that the shorting community, or the people who were trying to go short of the stock, would have been caught out on that move. Next up, Bluebird, and if I can type out the letters correctly, we've got a situation where we've gapped up beautifully within this broadening triangle from December through and above the 50-day line. Top of that triangle heading as high as $38, but we're looking for that as soon as the end of next month while we hold above the old March peak around the $23 area. So above 23, looking for 40. The $40 zone, $38 first by the end of next month. Another stock which has been in focus here for a little while now is Dermata Therapeutics. Here we're looking for that base to extend properly. We managed to end the week above the 50-day moving average. We've done that before 2 or 3 times in the recent past. Hopefully this will be the definitive move above $2.10, and the 50-day line looking for as high as $8 over the next 1 to 2 months, so maybe going into July. If you're squeamish about the shares, which you might be waiting for the clearance of the $4 level before you target $8 on Dermata. Moving on to a stock which is very encouraging, First Solar, and the reason for saying that is the way that the shares gapped up back in February. We gapped down twice over the course of April, but we didn't manage to fill that gap, so it's a failed gap fill, which is actually a very strong signal. That might explain why the shares rocketed at the end of last week above the 50-day line around $205. We're looking for as high as $300 by the end of next month. Ideally, there's no end of day close back below 220, which may be asking a bit too much, but that was the March to April resistance. So let's see if the shares are strong enough to meet that challenge. Stock which we were looking at before as a potential turnaround was GSI Technologies, looking for $2.50 on this situation. Obviously, that's been beaten by quite some distance, and all we can do now is look for the next potential target here, which is up towards $8 by the end of next month. That is a resistance line, a July resistance line projection from last year, and we are looking for that while the shares remain above the $4.20 area, which was the old July-August resistance zone. So above 420, looking for up to $8 by the end of next month for GSI Technology. Another hopeful on the bullish side is ImmunoPrecise antibodies. Here we've broken neckline resistance around the $3.25 area. Above that, looking for the top of that broadening triangle from September, as high as $6.50 by the end of next month. But a nice setup there on ImmunoPrecise. Stock which I don't think I've looked at or heard of before is coming up next, Meihua, which has managed to flick up a bit over the recent past. Decent weekly close for the shares. Bullish divergence here, not much of a charting situation, at least at the first glance, but bullish divergence there, broken that line of resistance there from April around the $3.50 level, and above that we're looking for $8 as soon as the end of next month at the top of that broadening triangle from the end of March. Just a few situations to go, 3 to be precise. First one is Ouster, and here we're encouraged by the break of recent resistance around the $4.50 mark. Above that, on an end of day close basis, looking for $10 as soon as the end of next month. So we are quite confident, and that would also fill the gap down that we had back in March. So everything to play for there, even if we only have an initial target there at $6.50, but above $4.50 looks like we've got decent risk reward. A stock where there really isn't much to go on, but worth having the coverage here as a marker is OhMyHome, with the spike that we had at the beginning of the month. Came back about 2/3 on that spike, now looking for the $15 area to hold ahead of a potential move up to the top of the rising trend channel that I've drawn from back in April. That's heading towards $28, and hopefully we could see that by the end of next month while we remain above the $15 level. Last stock of the day is Vero, which is actually known as Venus Concept, and here you can see managed to have the whole of last week largely above the rising 50-day moving average at $3.07 at the moment. The longer we stay above that area, that 50-day line, looking for $7 as soon as the end of next month. $7 is the top of that broadening triangle from back in October. If you're cautious, you'd wait for an end of day close back above the 200-day line at $4.70 before targeting $7. That's it for me today. More updates during the week.